CoreMedia.info. Your sexy smooth media channel for up-to-date crypto news. The real deal with sex appeal.
Hello, everybody. Welcome to Core Radio. And today we have Reggie Middleton on. Say hello for the guest, Reggie.
Greetings, guests.
And we're probably gonna have Sasha. We're not sure, he's having some issues with his microphone. But Sasha from Waves, he's gonna co-host. We also have House from Core Media.
Hey.
Big Daddy in the house, and got Lutz. Everyone knows Lutz. So Reggie, this show, I came up with the name of it. The name of it is Who is Reggie Middleton?
That's me. So I take I should answer, right?
Yeah, man. Who are you? You know.
Where do you come from, Reggie?
Bro?
We want to know more about you. You're a major personality out there. You've got extensive experience in finance, business models, and cryptocurrency. You've tipped your hat into. You've got a lot of information there. But we want to know who Reggie Middleton is. Before we take it any further, we're going to be following this up. But we want to know about you, and what makes you tick.
Well, I'm a plain vanilla type guy. Native New Yorker. I'm a father first and foremost.
Nice.
3 children. One of them's full grown. He's 24, so he's not a child.
Beautiful.
15-year-old and 10-year-old. And that's my full-time occupation. Other than being a father and a son, I'm a serial entrepreneur. Not the venture capital way, but a small sole proprietor type entrepreneur where I invested in real estate. I had a .com during the .com days. I'm soon to be 49 years old. Not necessarily a young boy, but not old yet either. I had a .com. After the .com, I did real estate investing. Purchased small income producing properties in brownstones in downtown Brooklyn, Fort Greene, Clinton Hill, for those who are familiar with the area. What makes the area special or different is it's the poster child of gentrification. And at the same time that it was being gentrified with the one demographic moving in, displacing another, and that one demographic, actually several demographics, it was gentrified several times over. But in general, it was a higher income demographic facing the lower income demographic from a rental perspective and purpose. And this was fueled even more by a credit bubble. And so you take a fire, you throw gasoline on it, you get a lot of heat. And add to that, someone who makes decisions by spreadsheets and numbers, attempts jabs and stabs at logic. And I did rather well from a return perspective. I was deep into the 40s in return on a cash perspective. It has cash in, cash out. Real estate has built-in leverage. It's called a mortgage. So you add in leverage, credit bubble, and fundamental gains, gentrification. And I did rather well until it got to the point where 2 + 2 started to equal 45. And I'm not even good at math, I'll be honest with you, but I know 2 + 2 doesn't equal 45. So
Yeah.
That's when,
So you're just taking a little back step. So your motivation, financial motivations must have stemmed from somewhere. Did you guys grow up with all the bells and whistles? Is running with the rich kids, or were you brought up pretty modestly?
I was brought up in a working class family in Roosevelt, Long Island. I went to Howard University in Washington, D.C. And, I wouldn't call it my motivation is financial. I'm a perpetual student. I'm always learning.
Right.
I try to listen more than I talk.
Nice.
And it doesn't always work out that way, but when I do listen, I do open my eyes, I do see things. It's like a tapestry being painted and unveiled in front of you. And I always thought it was natural. Everybody can listen. They simply shut the hell up, pay attention. But apparently, that seems to be a relatively rare talent these days, or capability. Which, and I discovered that about a decade and a half ago, 2 decades ago. And in doing that, I was able to do things that other people couldn't, or at least wouldn't. I'm still fully aware that most people can. They choose not to, or they choose to follow the crowd because it's easier. And I like to analyze things. I'm very analytical. I'm rather creative as well. So there's a synaptic bridge that connects my left side, my right side, where a lot of people have a gap. I have a bridge, and my little brain cells walk back and forth. And that's how I come up with the relatively crazy schemes that I do. Such as in the .com days, my .com startup was the 1990s version of Google Docs, Google Drive, where you had a Java-based Office suite that stored all the files on a web server, and you could access the Office suite and the files by typing in a password. And it was before its time, and lo and behold, maybe 10, 15 years later, Google Docs is now encroaching heavily on Microsoft Office, very heavily. My children, my two youngest children, use Google Docs extensively. And the only time they ever come in contact with Excel and Word is when they have an old school teacher who who attempts to teach them technology, but the fact they're teaching them last decade's technology.
Are they developers themselves?
No, I have them. My 10-year-old is a 10-year-old girl, and that's what she does full time. Fun, but
Good.
She's a very strong communicator, very empathetic. And I teach classes that they go to. I teach in their schools. I just posted a video on YouTube, and I teach very high level stuff. I teach undergrad and grad level and above curriculum, and everybody from say age 8 to all the way up gets it. She is looking possibly to start a business, but she's looking to get into the medical field. She wants to help people and animals.
This is the 10-year-old?
This is a 10-year-old.
Wow.
She doesn't want to be a doctor. She actually wants to help people, which is interesting. I like where her head's at. There
beautiful.
is a distinct difference. My 15-year-old is a strategic genius. I have pictures and videos of him. I don't know if you're familiar with New York, but he goes up to Union Square Park and he whips the guys, the professional chess players, to play for $5 a game. He walks through them. He's been doing it since he was 8. He doesn't even play anymore. He is not so much a very good chess player. He is very, very strategic. Very strategic. And he knows how to take his time and count the moves. He's gotten into technology and more so finance. And so we're going through options trading. He last week he told me he wants to go through shorting Nintendo. He thought the Pokemon Go thing was just out of control. Day before yesterday, Nintendo dropped 32%, 18% that morning, and then another 15%. I don't know if you follow it, but the reason it dropped is because somebody decided to actually find out how much Nintendo owned of the Pokemon franchise, which is 30%. Right. Well, if they only own 30%, why is their stock doubling? Yeah. With Pokemon Go being popular. So things like that he picks up on, and he's under my wing, and I'm teaching him. And my 24-year-old is also into animal care, biology, and he's still feeling his way out. He actually helped me start Veritasing as well, which is now a small contract.
Hey,
sir, yes.
Hey, Reggie, can you adopt me?
And me too.
I'll go put you to work like everybody else, just that, So.
That's all right. That's all right.
My 15-year-old is actually, for the balance of the summer, he's going to teach for me the digital asset management class. I started doing live streaming on Facebook and Twitter via Periscope. And I got quite a few requests for people to teach them Bitcoin. And I'm thinking teaching Bitcoin is actually too narrow a request. And I can understand how they make it because they don't understand. So I'm teaching digital asset management, basically how to manage digital assets. Think of an asset manager, but purely digital. And I'm going from the very beginning all the way up. Like when people think of digital currency, they think of Bitcoin or Ethereum or Litecoin or Vericoin. And that's not really the way the reality sits. Economically, digital assets or any asset that's digital. The largest coin is what? Quick quiz.
Bitcoin.
10 cents to the winner. Nobody gets it? What's the largest
coin
digital?
is Bitcoin?
Not even close.
We're talking about
the
market
US
cap?
dollar. US dollar.
Right.
Okay. And a lot of people say, what? What do you mean? Well, how many dollars do you have in your pocket, Lutz?
Yeah, I got about $80 in my pocket.
Okay. And how much money do you have in total? Let's see if he tells us.
In total in my pocket?
Total US dollars.
I got right now about maybe 24,000.
Okay, so, and where's that 24,000? You'd have to give us the exact location.
It's in the bank, isn't it? It's digital.
It's in the bank.
Yeah.
It's just a representation.
It's in one of those IRA things, yeah.
Okay, so you have it in an IRA. Let's suppose you have it in JP Morgan, an IRA. What you have in is a centralized digital wallet, a centralized wallet, which is your JP Morgan bank account. Okay, you have $80 in actual cash, physical currency, and you have another 24,000 in digital currency in your digital wallet, centralized digital wallet. Okay, just like Bitcoin. A lot of people would have, let's draw an analogy, you could have $24,000 in Coinbase. I probably wouldn't recommend that, but you got $24,000 in Coinbase. And you can have $80 in physical Bitcoin representations, paper wallets, etc., which you can actually trade. You have your physical Bitcoins with the holographic stripe to show that they were not tampered with. You can actually trade those. So, the US dollar is the deepest, largest market cap digital currency.
User was moved to your channel.
Euro will probably be second. Then you have the pound, yuan, yen, etc. Most people don't think of digital currencies as what they are. They think of digital currencies as cryptocurrencies. But cryptocurrencies are an offshoot of digital currencies with a different backing. Digital currencies are fiat currencies in general. They're sovereign-based, sovereign-backed, and they have a totally different value proposition than the fiats, than the sovereigns. So, the US dollar is backed by the full faith of the government, and basically the US dollar is the reserve currency, meaning that that's what every major service or item in the world is based in. Gold is based in US dollars, oil is based in US dollars, a lot of the major financial derivatives are based in US dollars. And the reason is the US has the biggest gun. Before the reserve currency was US dollar, it was the British pound. Why? Britain had the biggest guns. And if you go back in history, reserve currency always belonged to the sovereign nation with the largest guns. This is the first time when you have a currency that has the ability, the potential to compete with sovereign fiat currencies. And the reason is because Bitcoin has its own transportation rails. You could send and receive it without third parties, cheaper, more efficiently, and often faster. B, it's programmable. You can literally program it with Bitcoin script to make smart contracts. A whole nother conversation, a whole nother world. Very big deal, the biggest deal in Bitcoin. Of course, some things that are still not being discussed. People discuss Ethereum and their smart contracts. Bitcoin has a scripting language. As we have found out, it's actually safer to write and execute than Ethereum. Not like Ethereum is broken or inferior, but it's not fully understood by the developers who are writing on it, or some of them, and the result is things like the DAO, which is another large conversation. I don't know the sophistication and knowledge base of your audience, so I don't know where to actually start everything from scratch. But the DAO was basically a large application that tried to automate venture capital activities. They wrote a big application that was to serve to act as a venture capital. It was written as a smart contract, which is a computerized contract made of code that's supposed to take place of a legal contract. And the terms were in the contract itself, the code. So the code was the terms of the code was supposed to be final. Of course, Ethereum, the application developers, a lot of the so-called investors, you shouldn't call them investors because that would be illegal, because that would make this unregistered securities offering, but we won't go there either because I definitely don't want to get anybody in trouble. But the participants in the DAO and the developers didn't think everything through. Many of the participants didn't even read the contract. You have to be a developer to read the contract. So non-developers actually didn't do it. And apparently many developers didn't. But there's one developer who did and found he could take money out. According to the terms of the contract, he did.
That's right.
$50-60 million, and then everybody labeled him a hacker. I'm not a developer, but I've yet to have anybody describe to me what the hell he hacked. Reading a contract is not hacking. It's called following the directions.
Yes.
So, long story short, there was a recursive bug in the code that allowed you to repetitively go in and create child versions of the DAO and populate it with capital from the DAO. And he just kept doing it until he got, 50-60 million. That bug, taking advantage of that bug could potentially be considered a hacking, except for the fact that that bug was now part of the contract, and the contract was considered the final terms of the agreement between DAO and those who purchased the DAO tokens for that. So if the code of the contract is the final word and there's a bug in the code, well, that bug is the final word. Again, he didn't hack it. He read the directions. Now, Ethereum was forked, and the reason it was forked was they tried to get the non-investors, investors their money back. I was definitely against that, but I'm not a part of the Ethereum movement. I'm a fan, an observer, but not a part of it. And the reason why I was against the hack of the fork was because that would actually be a hack. That would be breach of contract and theft. Now, a lot of the Ethereum supporters, not all of them, but a lot of them, said that the guy who took the money was the hacker. He stole the money, etc. And I still don't jive with that. He might have did something that some could consider unethical, but if we have to give this an analogy in more layman's terms, or financial terms, we go to a broker dealer, a stockbroker, and I say I want to buy $100,000 of Apple stock, okay? And I want to buy $100,000 of Apple stock on margin. Okay, so I put I put $20,000 up, I get $100,000 up, and I get $200,000 of Apple stock. So I bought $200,000 of stock. I'm sorry. And then, as soon as I bought it, okay, the guy that sold it to me gets $200,000. He gets paid almost $200,000 in total, only putting a very small amount up because Apple files for bankruptcy the following day.
Right.
The guy that sold me the stock, okay, knew they were going to file for bankruptcy, and there was a clause in the contract of sale that said, but what he knows, this deal is still, valid. Now, I'm pissed off because I lost this money. I never read the contract though. Okay, and the guy didn't do anything but go along with the contract. He might have known of my ignorance and naivety, but that's not against the law. And a prudent man should read whatever contract he enters and signs. But I know the software company that developed the database for the transaction in the brokerage company, and I knew the brokerage company. And my friends in the database company lost a little bit of money. My friends in the brokerage company lost a little money. So I get together with them. I don't want to say collude, but I, discuss ways where we could possibly, get my money back. Now, there are ways you could get your money back. You could go in the market, make another transaction, and potentially profit to the amount you lost. You could go find a guy, put a gun to his head, say, yo, you run the money, right?
Yep.
Or you can have you can have the code rewritten to act like that transaction didn't happen. This is what happened with the Ethereum blockchain. It was forked. One side of the Ethereum blockchain said this transaction didn't happen. The other side did. They allegedly voted on it. I don't know about the participation in the vote, but I heard it was incomplete, and it was controlled mostly by a small cadre of large voters. But again, I don't know that for a fact. And I'm not anti-Ethereum at all. I'm actually pro-Ethereum, but I don't agree with the fork. And the reason is just like going to the brokerage company and saying, since I know the guys who wrote the code, we've decided we're going to undo this transaction and I'm going to get my money back. Now, the guy who sold us the Apple stock has every right to sue us for breach of contract, for theft, possibly for collusion in the real world. Maybe even securities fraud. Okay? or fraud in general.
You've articulated that very well. I'm just saying you've articulated that really well. It's a great analogy.
Actually, a lot of it came from the guy himself. He wrote a very interesting essay saying, I wish you would, and he already talked to a law firm. But the other part, the brokerage firm and everything else, that's exactly how I see it happening, which is why it's like calling the guy that sold you the Apple stock a hacker.
Yes.
You were ignorant, you didn't read the contract, he took advantage of that. But listen, that happens every 15 seconds on Wall Street. So, and most of the guys on Wall Street can't program worth a damn, and then that happens. Okay.
Read that.
Yeah. So what happens is apparently there are enough in the community who values an Ethereum blockchain that cannot and would not be rolled back. And so when they forked Ethereum,
that's the whole idea.
Yeah, that's it. That's how I see it too. When they forked Ethereum, they had Ethereum Classic, the old blockchain that they forked, and they had the Ethereum that they were backing. At least the foundation was backing. Another thing they didn't anticipate, I guess they didn't anticipate people finding bugs in the code that was considered a contract. They didn't anticipate someone giving weekly counsel, etc. But they also didn't anticipate significant backing behind the original Ethereum fork. And what happened is a lot of people started supporting it. Exchanges started adopting it. Several big mining pools jumped behind it. And now the hashing power and the difficulty rate is doubling and now tripling. It doubled 2 days ago, and it tripled yesterday. I haven't checked today, but there's a good chance if it's still going at the rate, increasing at the rate it's going now, it will match the Ethereum chain that's being backed by the consortium. This means, not the consortium, the foundation. This means that economically the foundation has lost control of Ethereum because they forked it with the anticipation, I'm assuming, that the coin or the blockchain that they're backing would be the one that would be used. But there's apparently demand for an unforkable, or at least a blockchain that's not forkable for the benefit of the minority or benefit of the application developer or the benefit of investors, which I think is where it should be. And like I said, more power to the guys, but I feel they made a very bad strategic and economic choice. And they weakened the premise of blockchain technology. And more Bitcoin and everything else as well.
Oh, they're making a scrambled eggs mess of what's going on in there. It's just blowing out of proportion. And but look, enough about Ethereum. We're really interested. I mean, Lutz, do you have anything to add to that?
No, I'm not really big on Ethereum myself. I know a lot of people are. I'm more into the waves.
Yeah, of course.
And actually, I like Steemit, and I like Library. You heard of Steemit?
I heard of Steemit. That's Daniel Larimer. He's the ex-CEO of BitShares. Strong developer, C++ guru, from at least what he tells me. And he seems like a very smart guy. I'm actually I just joined Steemit a couple of days ago. I haven't had a chance to do it, but I'm going to put some content on Steemit. Something pretty strong that they're not used to. I didn't get to finish talking about myself, but after at least my background. After I did the .com, I did the real estate investment, did very strong. Right about 2005, 2005 was my last purchase. I started in 1999, 2000. And I just couldn't justify prices that were being charged, despite the fact that I was making significant gains. I would get a property for free and pull, say, $80,000, $60,000 to $80,000 a year rent roll off of it, and then turn around after 4 years to sell it for 1.3, 1.4 million. And I did this multiple times over, and I wasn't flipping it. My goal was just to build a portfolio and keep it. I'm not the flipping type. But when I see, a broker overcharge for a building by 20%, a building that's worth maybe $1 million, they sell for 1.2 million, and then 3 months later, someone turns around and sells it for another 1.6. It's out of control. Residential real estate in New York should increase roughly 2 to 3% a year historically, if you take the bubble out. 2 to 3% a year to 20 to 50% a year is absolutely ridiculous. So the writing was on the wall for that one. So I sold everything off, and that one started a hedge fund, basically short everybody who ever did business with me. because I want to access that 10, 20, and 30 times over which the hedge funds got. So I spent $75,000 to get hedge fund documents written up by these overpriced, watched by Italian guy lawyers in Midtown. And as it turned out, the hedge fund market collapsed. And the hedge fund managers who had a zero return or higher got more redemptions than the guys who were losing money, because everybody was pulling their money out to try and cover their holes in Florida and their boats, etc. So that didn't work out, just, wasted my $75,000 to $100,000. But at the same time, I created a blog to market myself. I couldn't push the hedge fund directly, according to SEC rules, so I was to market myself. And the reason was I wasn't a typical guy that went to, the high-end private school, Harvard grad, Goldman Sachs prop desk. I was a dude from Roosevelt, Long Island, Brooklyn, and, the School of Hard Knocks. But I paid attention. I listened. And the blog got very, very popular. I started New York Review's blog, then moved on. It's, a recommendation to do my own. And I was free. I was just basically marketing myself. But people were asking me a lot of questions and were being very asking me questions rather forcibly for someone who wasn't paying for them, bugging me in the middle of the night. So I decided to get people to leave me alone. So what's the easiest and quickest way to get somebody to leave you alone? You tell me.
Quickest and easiest
your
way.
phone.
Ask them for money. So I put a paywall up, total silence, crickets. I had peace for 3 days, and then my phone rang, and it was Morgan Stanley. And they said, if we wire you $10,000, you'll put 3 of our prop desk traders on? I'm like, of course I will.
Oh.
What kind of question is that, right? And that's how Boom Bust Blog was started. So for 7 years, from 2007 to 2014, I was publishing my research behind the firewall, between $75,000 a month and $3,000 a year. Basically with my insights in the market. We had some pretty strong calls. Most of these calls,
some great calls, Reggie. I was watching, and you had some brilliant calls. In fact, you were the only one to discuss the negative interest rate or NERP policies. So, kudos.
Absolute nonsense. Yeah, this is nonsense. That's like negative life. It's called death in reality. But these concepts are going to be the fall of the European banking system as we know it. In 2007, I called the housing crash, which I explained that was just an offshoot of me selling my properties. The commercial real estate crash, again, another offshoot. I called the fall of Bear Stearns about 3 months before they popped. I called Lehman Brothers 6 months before they popped. General Growth Properties a year before they popped. I said they were insolvent. They probably go bankrupt. They came after me with nasty press releases Friday night on the weekend. No problem, no. They probably were trying to gear up for a lawsuit, but they had to file bankruptcy, so they didn't have a chance to. Marshall Mutual, Countrywide, BlackBerry, which used to be called Research in Motion and RIM. So I had a lot. I also said that Google was going to blow up. I said Microsoft was making a lot of money, but in a few years they're going to, run into saturation and start falling, which is exactly what they're doing. So the areas that I knew, finance, banking, insurance, real estate, wire networking, technology, the internet, handsets, stuff like that, I had strong calls on. And then I ventured out on other things that I didn't know well, but I was able to make very objective calls on because I wasn't married to the industry. So when I saw 2 + 2 and after the equal sign was, 79, I said, okay, I'm calling bullshit. And I go in, buy up a bunch of, cheap puts and publish research. And I had a strong enough following where I think after certain publications, certain blog posts or TV appearances, the stock would move because I had a pretty strong track record in credibility. I stopped that in 2013. After 2 years, I decided looking at Bitcoin. My clients were asking me, and I ignored it for 2 years.
That's when it started.
And when I finally did look at it, my jaw dropped. I was like, oh, what? Yeah. A digital currency that circumvents the central bank and the money center banks on
baby.
transportation rails and programmable. It has not been hacked after being in the public sector for 4 or 5 years.
Yeah.
Let's go. I thought I missed the boat on that. And I really
Right,
did.
so they piqued your interest right then and there after.
Yeah,
because there was quite a concentration of time around from 2007, 2006 up to around 2013. There was a lot happening, and you obviously applied what you had learned through the financial sector and real estate, and saw an opening to use this decentralized technology for a better purpose. So this is what brought you, I guess, into the Bitcoin space and ultimately UltraCoin.
Yes, that's what it was. UltraCoin was actually rebranded to Veritasium because there's an altcoin, or was an altcoin. I didn't think it would survive, and it didn't. Called UltraCoin, and it caused a lot of confusion. UltraCoin, or Veritasium, is basically a smart contract wallet. It's not an altcoin. It's a smart contract wallet that programs and scripts Bitcoin to make a contract between two or more entities. Do basically whatever you want. And we started in the financial industry with digital swaps. So you could swap any two values or more values, up to 4 a pair in a contract. 4, which is 2 pairs in a contract. And let's say you want to swap $100,000 of Apple equity exposure for $100,000 of US dollar exposure. That means you're going to go short US dollar, long Apple, or buying Apple stock.
Okay. So hold up. So not just jump straight in there straight away, because Veritasium is quite a significant technology you've got here. Let's just pull this apart a little bit. So Veritasium is a smart contract platform that is for primarily business.
For anybody who wants to trade value. One thing I've realized, the legacy businesses pretty much had to differentiate between retail consumers, small businesses, and large businesses, because the infrastructure to serve them was different. And you had to scale up in one direction to serve, say, big banks and hedge funds. Had to scale up in another direction to serve, the guy who wants to invest $500 or trade $500 or $1,000. And then in a different direction for medium-sized businesses who do $20,000, $30,000, $100,000. Bitcoin blockchain has a relatively low cost structure, very low barrier to entry. I do not have to differentiate from a technical perspective. Consumers, retail, big business, small business. Get access to the blockchain. You don't have to go through AML, KYC. There are no account minimums. You don't have to show your ID. You don't have to wait 3 days to get an account. There are no approvals. Access coin, you can trade. It's just that simple, that quick. You could be up and trading from nothing to doing a trade within 45 minutes, assuming it takes you 30 seconds to download the wallet. Coin in, it's going to take you maybe between 10 and 40 minutes for that coin to go through enough blocks to be secured into the wallet. And then you put your trade up. You find something you want to trade with, you put it up. It works as you put in tickers. We trade about 45,000 tickers, all asset classes. Stocks, bonds, currency, forex, indices, commodities, almost anything that will except for...
And it's currently functional. It's functioning right now.
It's currently functioning, trading right now. I cut off access to the clients because of regulatory issues. The CFTC decided they regulate Bitcoin, and because of that, Dodd-Frank, they could potentially consider us a swap execution facility.
Yes.
So I took a step back with that. We're pursuing funding. I've actually had a problem funding, believe it or not, which shouldn't be the case because I'm relatively well known and that's a damn good product. And we have the first 2 or 3 patent applications in the entire world. And I can actually verify that.
Look, I think we got the solution for you, Reggie.
Okay. That's capital markets applications to the Bitcoin blockchain for things such as swaps.
Right. Did you get that, Lutz?
Yo, I just have a couple of questions. First, how does one turn $24,000 into a couple million? And where do I put it?
Well, put it this way, it's a lot easier to turn $24,000 into zero than it is for a couple of million in the short term. The way investing works. This is how I teach my class. By the way, if you go to my YouTube channel, you can see the latest video I just put up. Very interesting class. We went through everything. We discussed what is money. Most people don't understand what money is. Money is a proxy for labor. And then we went through Bitcoin and currencies, and then we went through what is race as a social construct, black, white, etc., which seems to be off kilter, but that segued into pitching and, pitching your business, pitching yourself, etc. I enjoy teaching. So what we're going to do is I'm starting my research and advisory service back up again. It should be up and running by next week. And, we do real in-depth hardcore stuff. I have a couple.
Just quickly, where can we get more information about that, Reggie? Have you got a web page set up dedicated to that, or is that available from your YouTube channel?
You could go to veritasium.com and click the analysis, and you could get some of the free stuff I've been putting out. I don't have a page for the actual hardcore stuff yet. I do have it, but it's on a test staging server. But it should be up and out next week for everybody to go to. And, this will be paid for. And I charge good money for this because I have to pay analysts, I have to put my time in, and it's worth a lot. But I will always have a tier that's affordable, okay? It's just not going to be nearly as in-depth. And I will always give out some free information, either some opinion, or I'll give out the reports after the money has been made that could be made. And it goes to show you exactly how in-depth we go, and shows you what a real research report looks like versus stuff you download from, JP Morgan, Morgan Stanley, etc. I feel sell-side research is really just marketing in disguise, very thinly disguised, man.
Right, there you go, Lutz. Maybe take a chip off that 24G, put it into something like this, and you might be able to get that $1 million you're after.
Hey, you got a job for me, Reggie? Come on,
potentially. I do need skill and talent.
I work for Verizon. I'm a network network engineer.
Okay. Well, let's see. The research arm of Veritasium is going to support once we get. I have a couple of things I'm working on the blockchain portion, and once that's up and running, the research will go part and parcel with the peer-to-peer trading. Veritasium allows peer-to-peer capital markets. Remember I told you can start trading without going through bank accounts and brokerage accounts, etc.
Yes.
You trade directly with somebody else. Peer-to-peer capital markets is unheard of, and most people don't understand it because they insist you have to go through an exchange, you have to go through a brokerage. No, you take $1 and you buy, a piece of candy from a vendor on the street. That's a peer-to-peer transaction. You did not have to go through New York Stock Exchange to get that candy. You didn't have to go through Citibank. You didn't have to go through the federal government. And that's basically what Veritasium is about.
Great. It sounds very, very similar to the Waves platform and Sasha's idea. So that peer-to-peer capital markets just rings bells with me straight away.
Future. Now, the future is going to be fought by those centralized server-centric entities such as banks, brokers, exchanges. But, the record companies for MP3s. Hey, the media companies didn't even realize they should be fighting Google until it was too late. Too late. So, a lot of banks poo-poo Bitcoin. That is not a good idea. I'm not necessarily pro-Bitcoin either. I am very, very dispassionate. I do what's best for me and mine and my venture and my constituency, my clients, my family. I'm brutally honest but polite to an extent at least. And even though I'm not pro-Bitcoin, Bitcoin is, in my opinion, by far the most stable, has by far the largest network effect, and has the most promise going into the future, foreseeable future. And this is coming from a non-pro-Bitcoin guy.
I'm interested to look further into that, but that might be for another show. Given that your involvement in financial institutions and understanding comprehensively what goes on behind the scenes, I find it interesting that you're not necessarily pro-Bitcoin, which is purely a decentralized mechanism to do exactly what those guys are doing, but on a more trustworthy basis.
Well, because I'm not pro anything. I'm pro Reggie.
Okay. I'm pro Reggie too, so we're on the same page.
When you stop looking at things objectively and you start looking at it subjectively, you're bound to make a mistake. As a matter of fact, the fact that you haven't made a mistake means you're just lucky. So a dispassionate perspective is very, very important to have and keep. Very much so, at least from my perspective and my experience. I am bullish on Bitcoin because of its network effect, head start, its stability. It is hard. There's a $9 billion bug bounty out for anybody who could crack it, and it hasn't been cracked, and it's been out there.
Right.
And trust me, guys, who are smarter than I am have tried.
Yeah.
Okay. They break into JP Morgan, or attempt to break into JP Morgan, maybe 100,000 times a day.
That's
they
right.
succeed probably weekly. You only hear about it once every couple of years. And the Bitcoin blockchain, you hear about it because everything's public. The blockchain is for all to see. They haven't cracked it once.
That's it. And let's be clear, when we're talking about Bitcoin, we're talking about protocol, not the currency.
Right. Well, in my opinion, the protocol and the currency is hard to separate. Like you hear in the media, you're separating, Bitcoin from the blockchain. That's like separating, the engine from the car.
Yeah.
You can do it, but none of them work without each other.
Yeah.
So, if you're familiar with how it works, separating Bitcoin and blockchain is, the guys want to separate the Bitcoin or the token from the blockchain. Okay, they do it, and then they just replace it with another token, and you are right back where you started from.
Well, what I was more alluding to was that the currency on the Bitcoin protocol is, let's say, the first application over the protocol. So Bitcoin protocol, Bitcoin currency, I see them as two different things. I might have there might be an easier and a better way to articulate that, but I see Bitcoin as the currency as the first application on the protocol.
Right, and I agree. I identified it as Bitcoin with a lowercase b is the unit of value of the currency. Bitcoin with the uppercase b is the platform, the blockchain.
Yes.
So on that note, fellas, I'm going to have to go because my daughter, who I talked about, is expecting me to come home, and I am not there.
That's nice.
She's the boss. Trust me, she's bossy.
It was a pleasure meeting you, brother.
It was a very
much.
Great pleasure, Reggie. Thank you so much for coming on with us. We'll hook up again if that's all good with you. We'll touch base and we'll take it to the next level.
Okay, and send me a link to the recording. I'd
Indeed.
publicize it for you.
Hey, Reg, I'm going to give you a call, all right? Friday night, we're going to go out. We're going to get some drinks, all right?
Okay.
We'll go to Flatiron District. We'll go to the Flatiron Lounge, you know what I'm saying? And make some really good drinks there.
Okay, let's do that.
All right, Reggie, take care. All the best.
Okay,
all right, brother.
Goodbye.
Later.
Cheers.
I think Sasha's on.
Yeah,
he's
on.
Our co-host, man. Hey, Sasha, you there? It was really nice talking to Reggie.
User disconnected from your channel.
I'm sure Sasha would had some things
he
to say
plugged
about
in
that.
the laptop. He's there. He plugged in his laptop, and but he might have an issue with the microphone attached to it. But that's
All right.
okay. Hey, look, Reggie's a great guy. What an amazing character, full of energy. He's got a lot of information there, and smart guy, I tell you.
I'm gonna have to try to get in that family somehow.
Yeah,
I'll figure it out.
Shameless plug-in. That was funny asking for a job, Reggie. Oh my god.
Yeah, hey, I'm I got things to learn. I don't know.
Yeah. That's right, man. Who better to learn from?
I'm just looking for that shoe in the door, you know.
It's all good, my man. All right, well, we can close off the show and then bring it back.
All right, guys, everybody, thanks for listening and stay tuned. Since Sasha wasn't on tonight, maybe come on another day. Tell us all about the Waves platform and maybe how similar it is to Veritasium. All right, guys, everybody, you enjoy your night. This is Lute signing out. Love you all.
And House, peace out.
media. Blockchain news, crypto crews and interviews, keeping you tuned in to the ecosystem.